Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alex Steele with The Street. Happy Thursday. And together we're going to bring you the morning call. Scott, markets hit again on Wednesday. Broad commodity sell-off. We're seeing it start again this morning. Is this a sign of another leg downward or just sort of more volatile trading going forward?
Well, if you remember, we came in here yesterday and we were talking about the S&P was 10 handles off the recent highs, and I had no clue why. I talked to traders everywhere. Everyone's frustrated. A lot of people got stopped out of all their longs, and they're trying to figure out what to do. So we talked about the right thing to do would maybe be shorting some spiders ahead of the old highs. We just had a 3-day move on light volume. And sometimes when you do the right thing, you get lucky.
Yeah.
I don't think anyone really expected we were going to have that crazy down day like we had yesterday. But again, if you keep doing the right trade, what's opportunity called? It's opportunity.
Knox?
No,
oh.
Luck meets opportunity and preparation, and that's what we're trying to do for you here. So if you take a quick look at the S&Ps right now, as far as this entire run that we've seen all the way from last September, everyone's crying right now, but look where we are. If you take a closer look here, this is what you have to watch short term. This was that sell the excitement of the killing of Osama bin Laden. Here was yesterday's lower high, and now we're coming back into support.
So you're shorting again today into the market open?
Well, yesterday was a day to short. Right now we're opening down 8 handles, so we're down about 30 handles from yesterday's high to today's low. So this isn't a spot to just short. Hopefully you lighten up some longs. And if this is a spot, if you shorted yesterday, for cash flow, most people are probably going to cover a little bit into that 1330 because sometimes those pivot points hold at first, but then if we don't see a bounce off there and we see more relative weakness and these groups continue to break down, then that 1330 will be an area to short for a move down to the 50-day, which is down around 1322.
Is it too early to start picking away to buy long?
I do think it's a little early. I do think that, when we're in a market correction, you see technical damage, everyone wants to rush in, but we'll see some type of reversal action, which will give us some clues to start putting some quality stocks back on. But right now, we don't know if this is just the third inning of what could be a bigger summer.